SpaceX is about advancing rocket technology to the point where we can extend life and consciousness beyond Earth, to the moon, to Mars, eventually to other star systems.
How did Elon Musk become the first person worth $1 trillion on paper, then lose that title almost as quickly as he gained it? SpaceX's record-breaking June 2026 IPO pushed the estimated value of Musk's shares beyond a historic line, even though the company reported billions in losses. Supporters saw the reward for rockets, satellites, electric cars, and enormous risk. Critics saw a market driven by promises, political influence, and belief in one powerful personality. Musk has built companies that changed industries, but he has also missed major deadlines, benefited from public contracts, used political power, and turned future dreams into present-day market value. The first trillionaire, but mostly on paper. SpaceX began trading on NASDAQ on June 12, 2026, after pricing the largest initial public offering in history. The debut lifted Elon Musk's estimated net worth above $1 trillion. That did not mean $1 trillion appeared in his bank account. Most of the fortune came from the market value of shares he owned in SpaceX, Tesla, and related businesses. Net worth is an estimate. Analysts multiply the number of shares a person owns by the current market price and add other assets while subtracting known debt. If Musk tried to sell an enormous part of his holdings at once, the price could fall sharply. Investors might interpret the sale as a warning, and the market could not necessarily absorb every share at the last quoted price. That volatility soon became visible. SpaceX shares rose after the IPO and then fell heavily. Forbes reported that Musk lost his trillionaire status less than 2 weeks after gaining it, and by mid-July his estimated fortune had dropped below $800 billion. He remained extraordinarily rich, but the change proved that stock-based wealth can move by hundreds of billions without the owner spending or receiving that amount in cash. What SpaceX's financial records actually show. SpaceX's filing reported about $18.7 billion in consolidated revenue for 2025, an operating loss of roughly $2.6 billion, and positive adjusted earnings before interest, taxes, depreciation, and amortization of about $6.6 billion. These numbers do not support the simple claim that the company has no real business. Starlink, launch services, government missions, and other operations generate major revenue. They also do not justify any market price automatically. The IPO valued the company near $2 trillion, meaning investors were paying mainly for expected future growth. They were betting on Starlink expansion, lower launch costs, Starship, artificial intelligence, defense contracts, and possible new services. That is a very high-risk valuation because several projects require enormous spending and may arrive late, fail technically, face regulation, or earn less money than expected. The source says the SEC's allowed brokers to put customer money at risk for Musk. The actual no-action letter concerned temporary reserve treatment during the unusually large IPO and stated that customer funds would not be available for a broker's own use. SpaceX later entered the NASDAQ 100, which caused index tracking funds to buy shares. That can direct retirement money into the stock, but it is an open feature of index investing, not proof that the government secretly transferred pensions to Musk. The difference between vision and overpromising. Musk's companies have delivered achievements that once looked unlikely. SpaceX made reusable orbital rockets routine, reduced launch prices, carried astronauts for NASA, and built the world's largest satellite network. Tesla helped push electric vehicles into the global mainstream. These results explain why many investors give Musk more patience than they would give an ordinary executive. But his record also includes repeated deadlines that were far too optimistic. He promoted Hyperloop as a new form of ultra-fast transport, predicted 1 million Tesla robotaxis by 2020, repeatedly suggested full self-driving was close, and gave ambitious timelines for sending people to Mars. Some projects advanced slowly, some changed direction, and others never reached the promised scale. A missed prediction is not automatically fraud. Technology is uncertain, and ambitious targets can motivate teams. The problem begins when a leader's forecasts repeatedly influence share prices, customer purchases, or public policy without clear limits and realistic warnings. Investors must separate an engineering goal from a tested product, a demonstration from a profitable service, and a CEO's confidence from verified evidence. Taxes, borrowed wealth, and political influence. American billionaires can hold appreciating shares without owing income tax on every rise in market value. They may borrow against stock instead of selling it, gaining cash while delaying capital gains tax. ProPublica compared federal income tax with growth in wealth and calculated a 3.27% true tax rate for Musk from 2014 through 2018. That measure is not the normal tax rate on taxable income, but it demonstrates how differently stock wealth and wages are treated. Musk also became one of the largest financial supporters of Donald Trump's 2024 campaign and Republican candidates, spending at least $288 million, according to federal filings analyzed by The Washington Post. He later gained an influential government role while his companies held major federal contracts and faced regulatory investigations. Some cases and reviews were dropped or changed under the Trump administration, creating serious conflict of interest questions even when no illegal bargain was proven. The original script states that political favors created Musk's fortune. That goes beyond the available evidence. Public contracts, regulation, subsidies, political access, and government decisions clearly matter to his businesses, but so do successful products, investor demand, engineering work, and enormous risk. The honest question is not whether Musk fooled everyone. It is whether markets and governments have created enough safeguards around a businessman whose wealth, companies, political influence, and public infrastructure are now deeply connected. Elon Musk's story is neither a simple miracle nor a complete fraud. He helped build companies that changed cars, rockets, satellites, and the expectations of investors. He also created a culture in which distant promises can become billions of dollars in present value, and where political access may affect companies that depend on government decisions. The lesson is not to worship Musk or hate him automatically. It is to examine financial statements, separate products from promises, question conflicts of interest, understand taxes and leverage, and never invest because one famous person appears unstoppable. If you enjoyed this deep dive into his life and career, don't forget to like the video, subscribe to the channel, and turn on notifications so you don't miss our next story.